Hey everyone, welcome back to another week of lecture. This week it's a little bit more of a current event that's going on right now. We're kind of breaking the valuation chain of videos for this, but it's a big one, and there's quite a lot of bad stuff going on in the market right now, and I'm sorry for anybody who has had some significant losses. It's a terrible time for that, but the UST and Luna coin, the Terra ecosystem, has completely collapsed, and that's kind of what we're focusing on this week. How that happened, how the entire $14 billion of crypto wealth in those coins was completely demolished. So I'll take a look at that, and it's kind of sad, and it's really a big thing that happened, so it's important to stay up to date with this, know the risks, and to invest safely. So I hope you guys can take something away from this, and I'll talk to you guys next week. Hey everyone, hope you all are doing well amidst the crazy times in the market. But today we're taking a look at the collapse of UST, don't mind the spelling mistake there in the title, and Luna coin. So we're going to diverge from valuation this week and discuss an event that occurred this week that changed crypto markets forever. So let's take a look at what happened exactly. Major headlines were made this week as billions of dollars in crypto value was disintegrated into thin air. This marked the start of a larger decline in the markets, not just in crypto, but capital markets in general. So Terra USD, or UST, is a stablecoin that is pegged to or held at par with the US dollar. For an overview of stablecoins, you guys should check out our video about them, and I'll link that here. Both UST and Luna coin are part of the what's called Terra blockchain, and this is a larger blockchain much like Ethereum. The events that started unfolding last Saturday include both of these coins, since they work hand in hand. So it all started on Saturday, May 7th, just over a week ago, when UST lost the peg it had to the US dollar. Now, as a stablecoin should be, it's supposed to be 1-to-1 for US dollar, so 1 UST should equal 1 US dollar, but it has since fallen as low as 20 cents per UST. The real shocking event, however, has been with the steam engine of the Terra ecosystem, and this is Luna coin. Its collapse over the past week has been the fastest and most dramatic decline in crypto's history. And this is really important to take note of and to study. So in April, Luna was worth north of $100 per coin, but as of Thursday, its price had taken a nosedive to under 1 penny per coin. So to see just the severity of this, the once large $40 billion market cap dwindled to only 641 million in a matter of weeks. The crash caught millions by surprise and the world by storm, most specifically investors, and has caught mass media attention through the sheer volume and size of the losses that were incurred. Stablecoins are often used in the crypto space as an easy vehicle in order to hedge downswings in the markets. So in this way, investors put their funds, they transfer other crypto holdings, into stablecoins if they predict a decline is coming in order to protect their capital, and then swap back to those original coins when the prices are low and it makes sense to buy again to get a better price. Typically, since they're kept exactly at par with the currency that they're pegged to, there is no risk involved. But this is a bit of an irony here. But this has been proven incorrect this past week with UST's demise, as it saw a 70% decline in its stable peg of $1. So now how does it compare to other stablecoins? So UST differs from other stablecoins like Tether and USDC, which are the largest ones, in that UST utilizes a strict algorithmic based peg. So what it is it's an algorithm that maintains the peg perfectly so it doesn't have to be backed by physical dollars as USDC and Tether are. However, the algorithm does utilize about $1 billion worth of Bitcoin, and it has this in reserves as a backup to maintain the peg in case of emergency. The algorithmic nature caused UST to collapse this week, and this is the major problem. So now how does it work? The way Terra was set up was such that UST and Luna were closely together hand in hand. Investors could easily trade Luna for UST and vice versa. This is a very easy process. Now the interesting part was that as one is exchanged for the other, the one that was sold would be burned or fully removed from the total supply. In this case, it became more valuable if sold. So as an example, if you hold Luna and want UST, we can burn the Luna coins we possess and get about 85 UST per Luna coin. And this is pre-crash, of course, so this is about the price. This is because Luna traded at around $85, and $1 is equal to 1 UST, as we know, so we would receive 85 UST. The creators of UST, or Terra, wanted users to adopt UST and thus enticed investors to actively burn Luna for UST by offering 19.5% staking reward on UST. Now what this means is that every single year you would simply collect 19.5% return on your investment on an essentially risk-free investment, or so they thought at the time. Now this worked well for both cryptos involved. Luna became more valuable as it was burned, and supply was reduced to purchase UST, and UST was gaining popularity and more people buying into it, and this created an influx of cash. The Bitcoin reserves that Terra holds is strictly to maintain the peg of UST. So if UST were to be greater than $1, creators would then sell this UST in excess and buy Bitcoin with it. If it fell under $1, creators would sell Bitcoin and buy UST with the proceeds to push it back up to $1. This is done until the peg is restored at 1 USD. So how did this all happen? What exactly occurred to knock UST off its peg is a hot topic of debate and is still not fully known. It was discovered that roughly $2 billion of UST was unstaked last weekend and sold almost instantly after the unstaking occurred. This created a huge amount of selling pressure, and UST fell from its peg at $1 to just 91 cents in a matter of minutes. Now there's three main hypotheses about why and how exactly this happened. The first is through rising interest rates by the Fed and Jerome Powell, and investors sold because of this. The second is through volatile markets, which became increasingly worse, and so investors sold because of that. And the third is the attack on the ecosystem, and that Bitcoin arbitrage was at stake here. So when the price fell to 91 cents, traders immediately took advantage of the ability to trade UST and Luna at par and made 9 cents profit per UST. Now you can see how this would be very profitable if done in huge amounts. But this arbitrage is quickly eliminated by creators by setting a 100 million UST burn limit every single day. So the total burn of UST would only be limited to 100 million. This caused investors and traders to further lose interest in the Terra ecosystem, and this put further downward pressure on UST, and because of this it fell to 30 cents not long after this occurred. Many experts, economists, and SEC members believe the algorithmic stablecoin model is an unsafe one and bound to fail in the longer term. They argue that it's too easy to manipulate the peg and profit from arbitrage with this system, as was case in point with UST and Luna. Sources state that the attack is very likely related to Bitcoin, and we'll discuss this here. So here's why they think that. As the attackers sold their huge stash of UST, and they did not lose money due to the perfect peg up until that point, which caused UST to fall in price. down to that 91 cents. To counteract this, the creators would have had to sell large portions of Bitcoin reserves and buy UST to maintain the peg. This would drive down the price of Bitcoin, creating a perfect time and situation for the attackers to buy it. Although still only speculation, this is very possibly what happened in this situation. So what are some implications of this overall? One of the main and very obvious implications that we've already discussed is the sheer volume of wealth that was erased from crypto markets this week. It's somewhat reminiscent of the 2008 crisis. Specifically, over $15 billion in crypto value evaporated into thin air in a matter of weeks. The losses in UST and Luna forced crypto investors to sell other crypto assets to recoup losses. Now, inevitably, this would cause a decline in the entire crypto space and even had a contagion effect into the stock market. Uncertainty and fear also played a role in this. The effects were seen far and wide, catching the gaze high up of politicians and even the Securities and Exchange Commission, or SEC. This may speed up the agenda for proper regulation of crypto and more specifically for stablecoins, which are largely unregulated at the moment. They argue that other stablecoins are now at risk for attack since it was successful once in this endeavor, and this is really dangerous if they know this is possible. From this event, it's clear that caution should not be thrown to the wind when it comes to crypto, and it becomes crystal clear that investing and it emulates the importance of diversification overall. Do you believe that Luna/UST will make a comeback and offer huge upside after re-evaluation of their algorithm? Let us know what you think and leave a comment down below. I'll see you guys next week.